I'm Charlotte McLeod with the Investing News Network, and here today with me is Ross Beaty, Chairman at Equinox Gold. Thank you so much for joining me.
In person rather than virtually.
In person.
Isn't this great?
It is great. And you know, the first thing I wanted to ask you is, we haven't seen you around very much lately. What have you been focusing on?
I've been doing a lot of land conservation in British Columbia, a lot of philanthropy, environmental philanthropy. So I've been doing a lot of that.
Okay, but of course, still involved with Equinox Gold.
Oh, yeah,
Can't escape that.
active.
So let's check in on where the company's at right now. I know previously you shared the goal, you want to get to 1 million ounces annually. And I think for 2022, just over 532,000.
Yeah.
So what do you think it takes to get the company to that 1 million ounce mark?
Yeah, so Equinox is a young company.
Yeah.
We started 5 years ago. This is our 5th anniversary this month. And you know, it's not always straight up. We had a few really good years. We had a rocky year last year. Actually, it was kind of a crappy year. Quite frankly, we had some problems at some of our mines. We had inflation hit us. We had some blockades and just a few one-offs. And then there was a lot of investor skepticism and analyst skepticism about whether we were going to build this huge mine that we're building right now in Ontario on time and on budget. So there was a lot of noise and a lot of grief and crappy results and all that. So that's life. But we are absolutely on path to produce 1 million ounces. We're about halfway through. We produced 500,000 ounces, give or take, last year. We're on target for 500,000-600,000 ounces this year, and then another 240,000 ounces that'll come from our new mine in Ontario. And then we've got 3 other big growth projects internally that we are just going to execute and develop and build, and that's going to get us to over 1 million ounces. So it's just a matter of hitting our targets by doing a good job developing, good job exploring, a good job building new mines and wrapping that all together. And we don't need to buy anything else. Just stick to our knitting and do it.
Well, and you've always really emphasized the importance of growth, right? And so 7 operating mines right now. You've got the 1 coming into production, and as you said, the 3 other growth projects. So can you just explain for people who might not understand why you think big is better, really?
Sure. I mean, right now, big is better. There's absolutely no question. There's a whole bunch of reasons why. When you're bigger, you're accessing new investor capital pools. So there's a lot of big capital pools that only buy big companies. So if you can get into those pools, you have better multiples. You have better enterprise value versus market cap multiples, and scale does matter in that sense. So small companies trade for lousy multiples, big companies trade for really good multiples, and getting big is by itself a wealth creating exercise. By getting bigger also, you're more diversified, and you have a lot more capacity to suffer problems in one project that's not going to bring down the whole company. And I've been a big believer in diversification all my career. So this world, you also have ETFs you get into, and as long as you're in the ETF, you have a lot more access to investment capital. You have more ability to borrow. It's across the board. It's a good strategy today, and so we're doing that. And then on a personal level, I was really annoyed at these guys at Goldcorp when they sold out to Newmont. I just thought that was a terrible thing to do, to lose a big head office in Vancouver and a big world-class gold mining company in Canada, in Vancouver. And I thought, you know what? Let's go and build a new one, and let's build it fast, and let's build it big. And let's give this country and the city another leader in the gold industry. It's achievable. We just have to do it, put our heads down and build. And we've got a great management team, all the capital we need. We just have to do it. And that's what we're doing. Okay,
I did not know that was the inspiration. Very interesting. All right, so talking about company pipelines. So you've built up this great pipeline. You're building toward 1 million ounces. It seems like that's going really well. I wondered if you could comment more broadly on pipelines for major gold miners, because we hear all the time they've underinvested in and they don't have the ounces that they will need.
Yeah, no, it's true. I mean, if you look at, one of the reasons I love gold is, the demand side's fabulous, just fabulous. I think we had record central bank purchases last year. Lots and lots of people are looking at gold again, and its demand growth is great, but supply has been constrained. Actually, in 2022, the world gold supply was only marginally higher than it was back in 2014, right? So we've had almost flatline supply, which is remarkably bullish by itself. And yeah, gold mines are harder to find. They're much harder to develop and build. It's around the world, countries are getting more picky about where they want mines and where they don't want mines. Communities are, people are. It's just a tougher game right now. And so that constrains supply. And if you have growing demand and flat or declining supply, I don't care whether it's gold or golf balls, you're going to have higher prices. And they're going to be higher for longer. So the actual macro fundamentals for gold are terrific right now.
Right, and okay, so talking a little bit more about supply, which you mentioned has been quite flat for the last years. You know, we see governments and things like that, they want to give money to supply of critical metals. And I was thinking the other day, you won't see that for gold, right?
Yeah, it's a completely weird thing. I mean, in all my career, I have to say right now is sort of, if I could start again, you know, like if I was 20 or 30 years younger and started again, I mean, it's just a license to print money for people trying to build companies. You have all this new capital. You have governments throwing money at so-called critical metals. Critical metals, things like nickel and copper, they've been around forever, but all of a sudden now they're in vogue. Countries want people to develop these things. It's not to say you're going to be able to at a local level, because local communities typically don't. But you know, that's another story. So you've got new capital being thrown at the business. Generally speaking, because of the energy transition, people want more stuff that you need metals for, like windmills and solar panels and electric cars and batteries and those kind of things, and they're starting to challenge where they're getting them from. So you've got metals almost across the periodic table that are in vogue today, and then on the gold side. Gold is increasingly being looked at as what it is. It's real value. It's money. It's an alternative asset class to paper currency, and countries that are trying to get off the dollar, like Russia, Venezuela, many of the BRIC countries like China, they're trying to get some other form of global currency or even their own currency that they can use in trade that doesn't have elements of the U.S. dollar. So that's why they're looking at gold, and they're trying to do gold. Exchangeable currency notes backed by gold, or stable coins backed by gold, and all of that is going to increase the gold demand, all of it.
You know, that's been a really big topic of conversation here at VRIC, that de-dollarization trend. How much luck do you think these other countries are going to have with that?
Not that much, to be honest with you. I mean, they're going to be able to trade as sort of barter trade. And they'll back some of that potentially with gold. They can do that. But there's not enough gold in the world to really truly get off the dollar. The dollar is such a giant component of world trade. I think 80 or 85% of world trade is denominated in dollars. So it's going to be a very hard thing to get off of. You're never going to have a country sponsored, like a Russia or a China sponsored gold stablecoin. But you could have one issued by, say, the World Gold Council that's backed dollar for dollar by gold, and yet is a block currency digital currency, a blockchain digital currency. And so I can see that happening, and that would be extraordinary to have a digital currency truly backed by gold. We'll see if that happens. I know World Gold Council is working on it, and we'll see if they can pull it off. So I don't think countries are going to have a great success in doing it, but you could see more and more of this happening, which will all incrementally boost demand for gold.
Right, and so what are the other factors that you're going to be watching when it comes to gold in 2023? Because we know you have a bullish outlook, but what are you going to be following?
Yeah, I mean, it's the dollar. Look, the gold and the dollar, inverse correlation, the weaker the dollar, the stronger gold. That was what killed gold last year. And quite frankly, I was really challenging my own assumptions like last October, I'd say. October, November, I was thinking, here we have this insane amount of stimulus and money printing, trillions and trillions and trillions of dollars of money printing during COVID. And even before that, we have runaway reckless spending by governments all over the world. We have high inflation. Guess why? That's why. All of these things should be good for gold. We have geopolitical risk. Russia's invaded Ukraine, doing all kinds of stupid things. China's, saber rattling with Taiwan. All of this stuff should favor gold. And all of last year, gold was going down and down and down after it hit a record high in February. So I didn't know what to think, and I was really challenging, like I said, challenging my assumptions. And finally, in November, as the tightening that was really driving that strong dollar, everybody was buying the dollar as the Fed was tightening. all of a sudden they decided to shift from tightening, which was really hurting people and hurting the economy, hurting the stock market, to easing or removing all that tightening, dropping their interest rate increases down somewhat. Bingo, you had this just instantaneous reaction. Gold went up, bond market went up. I mean, it was across the board and almost too quickly. Gold's had this glorious run from when that started, which was the beginning of November, until today. It's up $300. It's wonderful, and it's kind of, for me, it's reaffirming the reasons that I'm bullish on gold, which I was really challenging last fall. But it's sort of back, and quite frankly, I think there's so much momentum right now. I'm very confident gold's going to blow through its previous high and sail into new territory, probably this year.
Well, I mean, thank you for sharing that, because I know among our audience members last year, a lot of people were questioning, you know, what is going on with gold? So it's kind of nice to hear.
Me too.
Yeah. Okay, so higher in 2023 because of the factors that we've been discussing. I wonder if we can go just quickly back to the gold miners a little bit, because, you know, we have been having inflation, and that's what's behind all these actions from the Fed. How do you see that impacting businesses? Will we see that ease? Will we see that improve as the gold price goes up?
Well, that was the fundamental reason that I was challenging my assumptions, because I always felt, you know, inflationary times are good for gold. You should have gold prices going higher when we have high inflation. So you have a natural, as a gold producer, you have a natural offset to higher costs. You have higher revenues. But it wasn't happening like that. So we had our worst quarter since we started in Q3 last year, which was a quarter where we really saw the impact of inflation on our costs. Diesel doubled, cyanide cost almost doubled, and these are massive costs in all of our operations, because we have a lot of big open pit mines and some underground mines. So diesel's super, super important. Diesel costs doubled. And, you know, and yet we didn't double our revenues. The revenues went down. Costs up, revenue down, result horrible. So what is happening now is inflation is moderating, while at the same time our revenues are going up. So that's a happy picture in reverse. But that was one of the reasons that last year people were really challenging things.
Okay, and this is really interesting to me, again, to hear that, you know, you're trying to figure this out, right? Because you've been in this business for quite a long time. So that to me is telling me this is not really something you've seen necessarily before.
Yeah, I mean,
these circumstances.
You know, the one thing that is the same is cycles do happen. But very often in the details, in the noise of a cycle, you have different reasons. So I'd never experienced for a long time, or being maybe as exposed to this as I am now, the importance of the flight to the dollar in times of worry, investment worry, where you had crypto tanking, you had the S&P tanking, you had bond market tanking. Simultaneously, everybody flew to the dollar. And once the dollar strengthened, that was the end of the party for gold. Gold actually was the best performer of all those asset classes. It only went down a few percent last year. Way, way, way better than everything else. But the dollar was king. When that flight to the dollar changed in November, I think it was, that was when the party starts again for gold.
Okay, and we should make sure as well to talk about what's going on with silver, because you have such a strong background in silver as well. We can't leave it behind. So it's a little bit trickier than gold because it's got two things going on. It's got its investment, it's industrial. And I've been thinking a lot about, you know, if we are headed for a recession, what happens to that industrial side, but also the investment side.
Sure. If we are headed for a recession, silver will be affected modestly. The key driver of silver, in terms of the biggest demand factor for silver right now, is actually photovoltaic cells for solar panels. And that is likely to continue whether we have a recession or not, because of course the global drive for decarbonization is real, it's everywhere, and it's driving demand for new solar panels across the board all over the world. And that's going to help silver. But certainly some of silver's demand will be affected by any kind of recessionary environment, much the way, you know, copper demand will be affected, so, you know, nickel or lead or zinc or any of those metals. I'm not so sure there's going to be really a recession per se, but I wouldn't at all be surprised to see the economies of the world going into what you might call stagflation, where there's very limited growth, but there's still moderately high inflation. And that environment's very good for gold and silver, because don't forget silver is also a precious metal, and it's an investment product. It's another substitute for as an asset class. It's another form of money, has been used for millennia. So gold and silver are going to benefit from that. And then silver has certain elements of its demand, industrial demand, which are going to work, like photovoltaic cells, but other ones that maybe won't work. So it'll be buffered by any kind of slowdown with those other elements that are going to be more bullish.
If you had to make a choice between gold and silver, which one would you think is going to be the best performer of the year?
Yeah, that's a very tough question. Silver tends to follow gold when conditions are ripe for gold to run, but it's held back if there's nervousness about the economy. And you have to look at, when you say the economy, the US, yes, it's the world's biggest economy, and it's a very important economy, but in terms of metal demand, it's China. Across the board, metal, all manner of metal demand, including iron ore and coal and every base metal, and actually now precious metal. China's the largest consumer of gold in the world. It's the largest producer of gold in the world. So you really have to look at what's going on in China. And this year, 2023, China is going to reinflate. It's going to regrow. It's going to push consumerism. It's going to push its banks to get back into the lending business. And so that should stimulate gold demand in China, which will probably mean gold will outperform silver in 2023, probably. I always say probably because, first of all, nobody ever knows really in the big picture. It's just a wild-ass guess. But I do think that these factors that are favoring more stagflationary conditions will hurt silver more than it'll hurt gold.
Okay, I think you've taken us through some good points on gold and silver. As we're finishing up though, are there any other thoughts you would leave people with when it comes to either the precious metals or the junior resource sector as a whole?
Yeah, there's one, and that is the astonishing disconnect between the metals, the price of metals, and the trend in metals, which are higher and higher prices, and the equity value of the junior resource stocks, gold, base metal, and so on. For some reason, investors have just ignored that sector. And so the valuation gap is growing, which means the value proposition for the juniors is getting better and better. So if I had $1,000 or $10,000 to invest, I wouldn't invest it in the metals, needless to say, I'd invest it in the equities. Those are the ones that are going to have a great run. And you can see that, for example, even in Equinox, even the sort of the mid caps right now. Gold has gone from, gold's gone up about 18% since its low in November. So that's a pretty good move for gold. Our stock bottomed in Equinox's stock bottomed at, I don't know, US $3, I think it was. I forget what it was in Canadian, back in on November the 3rd or 4th. And it's up 60% since then. So that's the leverage you get when you buy equities that are, really undervalued. And that's the intermediate producer company, right? Which is relatively low risk for most investors. The juniors have hardly moved. And so that's the sector that's going to see, I think, the biggest beta in 2023. And it could be explosive. It could really be a fun market this year for equity investors in these juniors that have been so beaten up, that have delivered such terrible returns over the last few years to the poor suffering investors who got into them. I think it could be a real fun year for those guys.
Okay, that was a really illustrative example, so thank you for sharing that. And thanks for ending on a fun note, because I don't know if anybody's been really having too much fun in 2022, so thank you so much.
I'm a pathological optimist, so you have to color everything I say with that veil.
Of course, of course. Okay, well, thank you so much for joining me. Great to have you as
Pleasure.
always. And once again, I'm Charlotte McLeod with the Investing News Network, and this is Ross Beaty.